Welcome back to CTV News Today. I'm Jacqueline Molcharek. A new housing survey shows the Canadian housing market is starting out on the road to recovery. Royal LePage says the average price of a two-story home is rising slightly and is up 0.1% from a year ago. But a shortage in housing supply is leading to bidding wars in several cities, including Toronto, Montreal, Calgary, and Vancouver. Now, in these areas, the average price has jumped over 0.5%. And in broad strokes here, the Atlantic provinces have seen a strong recovery in house prices. Western provinces have been slower to recover. Ontario and Quebec are seeing home prices stabilizing or even gaining slightly. So for more on this, Peter Kinch joins us. He is a mortgage expert with the Dominion Lending Centres, as well as co-author of the bestseller 97 Tips for Canadian Real Estate Investors. Good to have you with us, Mr. Kinch. Appreciate it. So what do you make of this? Is this, truly a rebound in the real estate market that we're seeing? Some might be a little surprised to see this happening this quickly.
Well, Jacqueline, it really speaks volumes to the fact that it's hard to talk about a Canadian market because just the numbers you just talked about, if you break it down from region to region, it differs. But in the big picture, it's basically saying that Mark Carney and the Bank of Canada's stimulation packages that they created a year ago are effectively taking charge. Consumer confidence is on the rise. And what's interesting, if you look at what's really driving it, it's not the high-end luxury homes. The recovery started in its core, which is first-time home buyers. A lot of, $200,000 to $300,000 price markets, which was entry-level homes. When you look at a softening of prices combined with record low incentive packages like interest rates being at record lows,
sure.
People got back in the market and they're snapping it up.
Yeah, I mean, the interest rates historically, we haven't had, interest rates this low. But let me ask, when you say first-time home buyers, how sure are we that they are, in fact, people who feel secure in their jobs going to buy these homes? Or is it investors maybe just investing in that kind of housing? What do we really know about the numbers here?
Well, I don't have the stats breakdown between investors and first-time home buyers, but I can say the investors in that particular niche market for the past year, I've been saying it to people, a lot of experts in the field have been saying for the past year, if you're a real estate investor, what a great time to get in. Historically low interest rates, softening of prices makes for cash flowing properties. But nonetheless, there's a significant number of first-time home buyers, and we're seeing this with the realtor-based driven market. Realtors are telling me across the country that the first-time home buyers are the ones that are really stimulating and being the driving force. They get in at the $200,000 to $300,000 range. That means the person selling that home can now bump up to $400,000 or plus.
So where is this going to go from here? Do you see this continuing? Certainly we've heard from Mark Carney that these rates are they expect stay low until about 2012. Is that pretty much on par with what you think or what you're seeing unfolding here?
Well, Jacqueline, I think we have to be very careful with what Mark Carney's saying recently as opposed to 6 months ago.
Yeah.
6 months ago, he made it clear that they're not going to touch the the Bank of Canada Prime will stay steady till June 2010. Last week in Victoria, he made comments where, quote, it's an expectation, not a promise. That's a very interesting comment from Mr. Carney. And what it indicates to me is a huge red flag. Yeah, expectation, not a promise. Okay, he's opening the door to change his mind. Now look what happened in Australia just yesterday or the day before. The Australian central bank decided to raise rates unexpectedly. A lot of people thought, I wonder if the Bank of Canada is going to do the same thing here. What was of particular note to me, Jacqueline, was the second that the Australian government raised rates, just out of the pure fear that we would do the same, the Canadian dollar shot up. And I think that's going to keep a lid on rates more than anything. Okay,
so just quickly, some of the, bidding wars that we're seeing, Ontario, Quebec, seeing prices stabilize or gain slightly. Why? What's going on in the hot areas in those provinces?
Well, we're even seeing that on the West Coast in Vancouver and North Van, West Van as well. And really, what I believe it was pent-up demand. Prices and product is really an issue of supply and demand. When 2007, 2008, when we had the recession and the credit crunch and all those other factors, people didn't lose jobs en masse in Canada like they did in the States. People didn't lose money en masse. They took their money off the table. They stepped onto the sidelines. And what that did is created a pent-up demand. And as soon as we saw a softening of the prices where people say, hey, that's affordable now, I can jump back in, combined with the low interest rates, you're seeing a result of that more than anything else.
All right, well, we'll continue to track it. That's for sure. Peter Kinch, a mortgage and housing expert, joining us. I appreciate your time.
Thank you very much.